Welcome back to another episode of Beyond the Sold Sign Real Estate Unplugged. We are your hosts and favorite realtors, Naya
and Lauren.
and we're so happy that you're joining us for another episode, another week. So remember that these stories that we're sharing are going to give you some insights into the real estate world, whether you're a buyer, a seller, an investor, or just kind of someone on the sidelines wanting to know a little bit more. You're in the right place. Today, we are going to share a story called Why Waiting for Mortgage Rates to Drop Might Cost You Money.
Let's get into it. So, a couple excited to buy their first home have diligently been saving for a down payment and closing costs while monitoring mortgage rates, waiting for the perfect time to make their move. They have heard that mortgage rates have been fluctuating and they're hopeful that rates will drop even lower than before, especially before they commit to a lender. They think that waiting a little longer might save them money in the long run. As they continue to wait, they keep an eye out on the housing market, watching for signs of a rate drop. However, what they don't realize is that while they wait, home prices in their desired neighborhood are steadily increasing and going under contract even quicker than before. Months go by and they finally decide to make an offer on a home that they love. However, they're shocked to discover that not only have mortgage rates gone up, but so have home prices. What they thought would save them money by waiting has actually cost them more in the end. They realized that while they were waiting for mortgage rates to drop, they missed out on locking in a lower rate and a more affordable home price. They kicked themselves for not acting sooner and realized that timing is everything in the real estate market. We often advise clients like this that while it's important to monitor mortgage rates, trying to find the perfect time, trying to find the perfect real estate market is very risky. So instead, I recommend focusing on a home that meets their needs, budget, and securing financing when they're ready. So kind of by staying informed and acting decisively, they can avoid missing out on opportunities like this and still being able to save money in the long run.
Yes.
So that is like the case right now in 2024. I feel like this has been the case since COVID.
This has been the case since COVID and since the 3% rates disappeared, everyone is still waiting to see 3% again. And that is not going to happen.
It's not anytime soon, I don't think, unless we get another COVID, and I hope and pray that we don't.
I would much rather not.
Yeah. 100%. No, we don't want that. So
you can't time the market.
You can't. And, like the Fed said last year or early this year, we're going to have a few rate drops. We're going to have 3, 4, 5 rate drops, and we have not seen one.
A half of a
we ain't seen nothing. I feel like I just keep seeing rates go up. And this is what we see in the market right now all the time. So we may have a buyer consultation. We'll speak to buyers, and then they may fall off because they may then speak to the lender and realize, oh my God, rate is at 8%. This is making my mortgage payment a lot higher than what I was expecting. This is not what I want. I'm going to actually step back for a second and maybe I'll wait for 6 months and see what happens. And it's like, okay, as a realtor, and you're just kind of like, okay, whatever works best for you. But all we can tell you is straight up, and we're always going to be honest and say, we don't know where the rates are going to go. We don't know if they're going to be higher. We don't know if they're going to be lower. We don't know what's going to happen. So you waiting, it's just a risk. It's just a risk on you. And I get it. It's just a risk.
Yeah. There's no guarantee that your waiting is going to produce the outcome that you're looking for.
Thank you.
And we always say this. Some of y'all have probably heard it. Maybe you have or haven't. But we always say, date the rate, marry the house. And that's just because focus on the house that the house that meets your needs, your criteria. Focus on the house and not so much on what the rate is. Focus on getting the house, essentially. Yeah. And you can date the rate, meaning the rates change and you have the ability to refinance at some later point, but at least you can get the house that you wanted, that meets what your family needs, versus maybe prolonging your living arrangement right now that might not be working, or prolonging wasting money that could have been going into building equity. We talked about this kind of on episodes, I don't know, sometime prior, where I was saying that there's a cost. Like, no matter how you go about it, there's always going to be a cost. So your cost may either come in the time that you, I don't want to say wasted, in the time that lapsed while you were waiting for a different rate, because now housing, the prices of the houses in the market, in the neighborhood that you wanted have gone up. So now it's like that percentage in rate didn't even matter, because you're still going to pay that because the house's price went up. Or, you know, if and when rates drop, you're also paying a cost, because you're probably still going to have to offer more or get something less because of competition. So no matter how you play it, move the chess pieces, it's all going to likely come to balance out, to even out to the same payment. So you might as well just go ahead and do what you need to do, and not try to be a fortune teller, because we can't, nobody can. We just can't.
Yeah, no, you. I'm like, you said that.
I don't know what else to say. We just can't predict it. So just go ahead and do it. And, you know, again, what we've been saying, pick a budget, you know an amount that you don't want to go over, and just go from there. And stop looking at what the rate says, and stop looking at whatever else. Just look at what the monthly payment is going to be. And move forward. Are you okay with that? Yes. Are you okay with that? No. And adjust your search based on that, but not based on the rate saying 8% or 3%.
Because they're going to change.
It's going to change.
Or they go up or down.
That house
like
is going to go up and down. Right. It's going to go up and down, and it's going to balance out. So it's like, well, you could have just should have did it then, right? It's the same amount or more now.
Now you're like, why? And you may be wondering, like, well, wait, why would the home prices go up within like let's say you're looking now, and 3 months, you're like, I'm gonna wait 3 months, right? So let's say the rates dropped 0.5%. Let's say right now they're 7.5%, they dropped to 7%, and you're like, oh great, I waited 3 months, the rate dropped 0.5%, but then the home prices went up $25,000. And you like, wait a second, why did the home prices go up? Because the buyers are the market is making it go up. So when a house, let's say 2 houses sell in the neighborhood, one house sells in the neighborhood, goes on the market for $400,000, but the buyers really wanted it was competition, so they drove the price up. Now it's sold for $425,000. Now the next house is going to come on the market. Why would they sell for $400,000 when their neighbor, they're going to start at $425,000? So I'm starting at $425,000 because I want to get the most from my house. So they're going to start at $425,000. The buyers who lost out on that other house and didn't win that one, they're coming over to this house at $425,000. They may offer exactly that at $425,000. They may offer $430,000, $435,000. Either way, the house is going to go up a little bit more. So now, even though the rate went down, the home prices went up. And just like Naya said, it's going to come around the same amount, and you're going to spend the money either way. So you might as well just go ahead and do it now. And then if you're renting, that same money, you spend it anyway.
Either way.
Same thing. So either way, it's going to come out. The money's going to come out. You might as well just go ahead and do it.
It's going to cost
you. So it is going to cost you. May cost you a little, may cost you, but it'll cost you.
Oh man, it is going to cost you. Okay.
So staying informed with what's going on in the market, I think the best way to do that would be kind of looking at a portal. Where you don't really see the rates on a portal, but you see the home prices.
Right.
Okay. You don't really know what the rates are. You don't know what they're going to be. But on the portal itself, on the housing portal that most realtors will set you up on, you see what the home prices are. Right. So,
and you'll see, the days on market, maybe, how quickly it came to market and it went under contract. So that can kind of help you gauge how long homes that you're interested in are staying on the market. Yep. And you can also, if you wait that 30 days and you go back to it, you can see the price that it listed for and the price that it sold for. And that can maybe give you an idea of the competition, or, how far in price people, how the price drove up, as Lauren was saying, based on competition. So
right.
The cost going to be the cost. Y'all.
The cost is going to be the cost for real. Okay. And then considering like affordability over the timing, I guess, like what you can afford based on the time, trying to time out the market. Y'all are going to try to time out this market and y'all will not buy a house.
Yeah.
I swear you will not buy a house, because let's talk about this real quick. Because if rates go down to 3% and you're out here, like, you gonna buy out here, it's gonna be crazy.
It's gonna be like when COVID happened and y'all, because that wasn't me.
Right.
Y'all were in those grocery stores getting all that toilet paper, all that rubbing alcohol, not saving nothing for nobody. And y'all should still be ashamed of yourself.
For real?
But anyway, the housing market is gonna be like that when everybody was trying to grab up all the toilet paper.
And they taking everything. And them homes were them homes were not good. They were not in the best shape. People did not care.
Some people were getting stuff sight unseen.
Sight unseen. They didn't care. They did not care if it needed
From
work.
out of state.
Because they were like 3%. You can't. You really can't beat 3%. But you also need the inventory. So if there's not enough inventory out here, the prices are still going to go up. And then you have 30 buyers out here because now it's 3%. And they are going to...
Waited.
Everybody waited. Because everybody waited. Where now, if rates do got on 3%, you already chilling in your house, and all you gotta do is refinance. Now you got same house chilling. Now you got 3%, and now you have a lower rate. Stop playing. Don't be trying to time the market, because y'all gonna lose every single time. I'm telling you. Don't do it. Just see what's affordable. See what you can afford.
Yes.
If you're like, hey, I can afford a $400,000 house, these are the locations I want to be in, then that's where you stay. And regardless of what the interest rate is going to be, that does mean that you may be able to afford a lower house because the interest rates are a little higher. But I still think you'll be able to get the house that you want.
Exactly.
And that's worth it. So.
Yep.
Let me see. What else can they not, or I guess, should not be doing?
That's pretty much it. I had a thought and it kind of left me.
Definitely working with while you're thinking about it, sorry.
Yeah, no.
Working with a lender who knows the market and a realtor who knows the market. When you work with that team together is very, very important. Working with those two people, like, they got to be in sync. They have to be, they have to communicate. They got to definitely be on the same page with you, so everybody knows what's going on. So if your realtor calls you and say, hey, listen, these two houses are about to come on the market, your lender's like, okay, great, these are the rates, because your realtor, a good realtor, is going to send those two properties to your lender so that before you even go out and see the house, so that way you know what your amount is going to be, what your monthly payment is going to be, what your interest rate is going to be, how much your principal, interest, taxes, insurance, all of that is going to be. They are going to provide that to you. Us as your realtor, we're going to make sure that you're going to get the best deal for the house, kinda. We're in competition, but we're going to make sure that we are also keeping you abreast with what's going on in the market, make sure you're not missing anything. So just having a very knowledgeable local lender.
Yes.
Local, sorry, that's very important, because y'all do like to work with these banks. They don't know anything about what's going on in this specific market, but when you work with a local lender, they will be able to help you. And then obviously the realtors are already local, so we'll be able to really guide you and help guide you into a property. Sometimes y'all may not, I hate to say this, but I'm gonna say it. Sometimes y'all don't really trust us, and I get it. We understand, but we also realize that sometimes you have to lose out on a house in order to realize, oh, okay, what y'all are saying is actually right. Because when you what you don't know is you don't know. So when you step out and you go looking for houses and we kind of guide you into what you're not supposed to, but what you should be offering on the house, it sounds crazy. Trust me, I get it. Like the amount that we're saying and the contingencies we're telling you guys not to do and put in place or suggesting, and you're like, I don't want to do any of that. And it's like, okay, I understand. Don't do it. We're going to write the offer how you want it. And then when it doesn't get accepted, you're like, why didn't it? Well, these are the reasons why. After the first time, it normally clicks and it's like, okay, now I should probably listen to my realtor, my lender, who's actually in the market every single day and doing this. This, I guess, is what's going to win me the house. So sometimes buyers do have to lose out on a house sometimes in order to realize, all right, we really gotta put some things in place. So I think those are
the moral of the story is
the moral of the
story. It's gonna cost you now or it's gonna cost you later. It don't matter, but there's gonna be a cost. It might be a little bit more.
Yeah,
maybe it'll be a little less, but it's probably gonna even out or cost you more. So you could have just did it already.
Yes. So go ahead and do it, y'all. Just go ahead and knock it out. Don't wait. So we gave y'all some reasons on why waiting can cost you more money. So go ahead and get out there. Give us a call. Y'all know how to reach us. Give us a call and let us know. If you don't know how to reach us, it will be on the end of this YouTube video, and we also have all of our contact information on the bottom of the screen. So we just again want to say thank you all for watching us and joining us yet again. You can find us on YouTube for all our visuals. Please don't forget to subscribe, like, comment, and share. You can also find us on TikTok and Instagram. All of our shorts are on there, so you will find us on there all day, every day on Beyond the Soul Sign podcast, and also on our audio. You can listen to us on your way to work, on your way home from work, or just while you're in the house, on all of our podcast platforms. So we just want to thank you guys again for joining us, and we'll see you next week.